Hey, this is Danielle, and welcome to the free video. So, today I wanted to talk about MRVL. This stock has been doing a really good job showing a lot of relative strength. We have a nice trend. We have a hold of a 50 simple. We have a squeeze. We have the fact that after last quarter's earnings, it had a fantastic move, really nice gap up. It's come back and basically filled the gap, which is typically what a lot of these stocks need to do after a move like that before they can get going. And at this point, because it's holding this area, because it has a squeeze, to me it looks like a great buying spot, especially because of the wick on the bottom of the candle. Now, this company in particular isn't entering a run into earnings quite yet. It's not going to be entering that zone until the end of the month. But I do still think it's a good spot to start averaging in and just buying shares. This is a company I've been wanting to buy more shares in. I do own shares already. It's a really funny story, actually. A couple years ago, my son, I was letting him pick out some companies he wanted to buy shares in, and he wanted to buy superhero stocks. And so I was like, oh, MRVL, you know, we did a little search, and I think he was, I don't know, maybe 5 at the time. And so we bought it super cheap a couple years ago, and then I realized my mistake that it is not, in fact, a superhero stock. And this is a great company right here. So now at this point I want to add into it, and I always think that story's a little bit funny, but great relative strength leader in the space. Overall nice hold of support. I think with this one, you know, you're trading at $82 a share. Let me see. Honestly, I would buy it all the way back down into 70. I think that would make sense. I think it makes sense to start averaging in here. And, you know, if it did actually fall down to 70, just continue averaging in at that level. Let's look at the weekly chart. So weekly chart's definitely pretty extended. And that's why I think that, you know, if it did pull back a little bit further down into 70, 75, it would still be just fine as far as a buy is concerned. But at the $82 price point, I think it would make sense to come out all the way into February. And for example, I mean, you could really just even sell the $80 puts, especially if you wanted to pick up the shares. That would make sense. So when you're looking at, you know, selling the $80 puts for $3.40, and then that way, you know, if you could pick up the shares at 80, you could do that. You could also do it as a spread. If you just wanted to do it purely as an options trade, just plenty of juice in there for that February series. Or you could target a return back up to 95, so that'd be about a $10 expected move, and put like a debit spread or a butterfly up at 95. You know, 90, you could do it 80 to 95. Let's see what that would look like. At 80, 95, and it's only going to cost you $5 for $15 wide, so it's a 1 to 3 risk reward. So all those ideas make sense to me. Yes, it is in the tech space. It's been a little bit dicey as of late, but overall I like the stock. I think there's relative strength and it makes sense. So I hope you enjoyed this video. If you didn't know, my colleague Sam is going to be having a webinar on the 13th, so pretty exciting. I really enjoyed his webinar that he had last week, and if you missed it, here's a follow-up. It's going to be great. Check it out. You can sign up at simplertrading.com. Other than that, have a great rest of your evening, and I'll see you in the next one.
Hey traders, it's Danielle here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to like and comment down below. Also, be sure to subscribe and click the bell icon so you will never miss the latest take from our trading experts. Did you know that we provide real-time trade alerts so that you know exactly what we're doing, exactly when we're doing it? Go to www.simplertrading.com to learn more. Good trading, and we'll see you in the next video.